Who has ever become a millionaire on their own? Warren Buffett joined the Billionaires Club 55 years after becoming a millionaire, but Jay Walker actually completed it in just a year. During the dot-com bubble, he established Priceline.com, which immediately increased his net worth ranging from zero to billions. However, that was unsustainable because his net worth also decreased when the bubble burst. Buffett, who is still at the top of the list and doesn't seem to be going anywhere soon. You want to accumulate that kind of money. Money is a difficult game to play. If you don't know the rules, you're doomed. It's taut, brutal, and competitive to flop. Most people's concern is that even if they put forth a lot of effort during their life, they often, as a result of their inability to use their money effectively, they end up being poor more money still. In other words, they lack investment knowledge. Suppose you've been diligently accumulating money and now have an additional $1,000 in your money in a bank. That is a significant accomplishment considering that only about 70% of Americans have $1,000 extra in their bank account in dollars. Therefore, save it instead of spending it on a pointless device or a pair of shoes you won't wear once. Then keep it in your wardrobe for a long time before discarding it. Let's pretend you're investing that cash. However, how do you invest your initial $1,000 is the question. Do you invest it in the stock market or in real estate? Which types of stocks do you purchase? Is $1,000 sufficient to start investing? All of these and many more questions will be answered by us. So click the play button to start the video. Consider this example to gain a better understanding of what investing is and how it functions. If you put in a lot of effort and save $300,000, you could go see a Ferrari store and get a luxurious vehicle to demonstrate your achievement. Or real estate, a house, can be purchased and rented out. You will receive at least $2,000 per month. You can sell it if you decide you no longer want to get that $2,000 income each month return on your initial investment. By doing so, in fact, your investment may even increase in value, allowing you to sell it for a higher price, increased cost. And that is how business is conducted. But $1,000 cannot be used to purchase real estate. Even though that wouldn't even cover a down payment, you still have the option to invest. Place your $1,000 somewhere else and watch it grow. The most straightforward method is to just deposit it in a savings account and get interest. But why would the bank reward you for maintaining your funds there? Wouldn't they be better off charging you? No, you see, the bank will take your funds and lend them to a different party at a greater interest rate and would give you a piece of the revenue. Briefly, that is how banks operate. The main issue with this method is the extremely low interest rate on the deposits account that is not worthwhile. Therefore, the most you might likely earn is 0.8%. Therefore, if you deposit that $1,000 now into a savings account, after 12 months you will also get an extra $8, which is incredibly low given that the Fed's goal inflation rate is between 2 and 3%. Consequently, if you are not receiving at least 2 or 3%, the true value of your $1,000 will lose value over time, allowing you to purchase less products each year. But why are deposit account interest rates so low? Because the epidemic pushed the Fed to lower interest rates this year, to bring them down to stimulate borrowing and spending by everyone. Once we emerge from this recession in a year or two, the Fed will raise interest rates. Interest rates on savings accounts will drop from 1, 2, or possibly 3% to, as well as climb. Purchase of government bonds is your second choice. A government bond is a type of instrument that the government issues to raise funds to government outlays. Suppose the government wishes to construct a school but lacks the funding to do so. As a result, it issues an IOU, a document that states that the owner of the security is owed. The U.S. government will pay this much money plus interest. Although this example is obviously oversimplified, the main idea is nonetheless conveyed. Interest rates have a significant impact on government bonds, so as their government bond rates this year are less than 1%, yet 2 years ago, when interest rates were high, reaching as much as 3% for government bonds, which is not too bad because the safest investments you can ever make are government bonds. If you are lending money to the U.S., there is risk associated with any investment. What are the possibilities that the U.S. government would not repay its debt? Government? The failure of the U.S. economy as a whole may be required for the U.S. government to become bankrupt. Because of this, U.S. bonds are regarded as the world's safest investments. However, if you want to get a bigger return, let's say 10, 20, or 30%, you must think about making a stock market investment. For instance, just this year, the stock price of Amazon rose by more than 80%. The price of Google stock increased by close to 30%. The value of Tesla's stock rose by 721%. You did hear that right, you did. 721%. Then, why would anyone invest somewhere else when they can double or even treble their money? Your capital on the stock exchange. Risk is the answer. For instance, there isn't much risk when it comes to government bonds. In actuality, it carries little danger. But with regard to specific businesses, there is a chance that they could fail, any bad news can cause the stock to drop, including negative earnings price reduction. The business may launch a product, and if the general public dislikes it, that can make because of certain unfavorable news that could lower the price. Larger returns also mean more risk. Apple has a strong track record and has far fewer chances of failing than Tesla. The fact that Tesla grew by 721% this year despite having less room to develop than it does year, but Apple by only 70%. How much risk you can accept without going crazy is something you have to decide for yourself. If you just have only $1,000 remaining, it might not be a good idea to risk it all option because you risk losing the majority of it if things go wrong. Consequently, investing in an index is one approach for investors to reduce their stock market risk. An index fund would follow the most well-known, the S&P 500, which monitors the 500 largest U.S. corporations. Invest in these Fortune 500 corporations in essence. While some of these businesses will undoubtedly fail, others will prosper according to historical data. The S&P 500's average return rate during the 1920s has been about 10%. This implies that purchasing a share of these index funds entails purchasing a minute the 500 largest U.S. businesses. My top 3 preferred index funds are VOO, or the Vanguard 500 Index Fund, QQQ, and an Invesco Index Fund along with the Fidelity Zero Total Market Index Fund. They are all excellent investors who tend to like the same businesses. However, how can one purchase shares in these index funds? Where exactly do you begin? You must first locate a broker. This person is qualified to sell you stocks. Before, someone was always there, so you had to pick up the phone and contact him to ask to offer you some stock. Do you recall the Wolf of Wall Street? He would make calls all day long, trying to sell people worthless investments. Thank God, nevertheless, that it is the year 2023, as conditions have greatly improved. In order for you to acquire shares from the convenience of your smartphone, brokerage houses have developed apps such as Webull, Robinhood, and so forth. Simply download one of these apps, register, and you can begin investing. Right away, please. In fact, if you sign up for a Webull account through the link below, you'll receive 2 free stocks. Just a warning, there's nothing wrong with that even though it's an affiliate link, because you are getting 2 free stocks is fantastic, isn't it? I would say that's an excellent place to start. Verify the description's link. I made this video as basic as I could so that anyone who wants to start, you can start investing right immediately. A lot of the time, you want to start investing but have a ton of questions and you begin researching everything online. But after a while you become fatigued and just renounce and try again several months later. So I made an effort to address all of your inquiries in this brief movie. In order to show your appreciation for the video's value, please click the thumbs up button. If you're new around here, click the bell and subscribe buttons. As always, thanks for watching and see you soon.